Geraldine, first of all, I don't know what prompts this mood, right? It seems to be like it's risk off. People are concerned about valuations, but there's no real trigger. Is this kind of, what you're expecting, a correction that comes from, mood and sentiment, but without a real pinpoint?
I think you just pointed to it. There's no real news, and I think your positioning was probably relatively heavy. We had a very strong rally. All the catalysts from the earnings season have passed, and somewhat the market needed a correction and consolidate. So I think at the moment it's rather a lot of noise than proper signal. Proper signal would need to come from real data, like maybe the CPI later this afternoon, or things that would genuinely worry us. But so far, I would say it's a healthy correction.
Do you believe, Mark, when you look at market functioning, what are they worried about at the moment? Now, I know you write a lot on central banks, and that's probably where the biggest risk could come from.
There's quite a lot going on in politics. You have the US tax situation, you've got the Brexit situation here, you've got Germany failing to form a government. So there's some reason to be taking some money off the table. But again, if you look at the global economic expansion that we're getting, it's pretty good. You look at profitability for the companies, it's pretty good. I think Geraldine is right. This is a healthy correction. You might see more of it because why not take some profit? But going into the end of the year, I don't see any reason why you'd see stocks giving away the gains that we've seen this year. And let's not forget, this year's been exceptional compared to what people expected at the beginning of the year. We've had a very strong rally, so it's all good.
But Geraldine, at the same time, and we were speaking to Patrick Harker earlier on Monday, and actually, if you look at the 2 10-year spread in the US, you could argue that this is partly to do with what the Fed is doing, but is there something more sinister, right, that bond investors are looking at?
I think there's a mixture of things. One, of course, is the fact that, as PIMCO said, we're in the new neutral, and so rates are not going to go as high as they used to be. And therefore, given what we had and the Fed hiking in the front, it tends to flatten a little bit the yield curve. That said, I think the levels that we are seeing now are relatively low. We think there's still 3 hikes to come in the next 12 months. We look at global growth is fairly good. We think that inflation actually is going to creep higher. So overall, I wouldn't see anything sinister in this signal, just positionings and market moves.